Welcome to Pure Hustle Podcast. I'm Mike.
And this is Orlando, and we're on episode 111.
Whoa, triple ones.
There's something super special about this episode because it's triple ones.
There's something special about every episode.
That is true. We can't say one is more special than the other, but we really are looking forward to this one just because we want to start off the year right. Even though it's one of those, like for me, I'll be honest, it's one of those things that kind of like, oh man, like I'm going to lose like hours of my life because I was terrible at doing this. And Mark's I haven't dropped his name yet, but
that's okay. It's in the title.
Oh, it's in the title. That's right. Okay. So Mark, who's going to be coming on, is going to help us so I don't end up doing the same things all this whole next year.
Yeah, no, and that's exactly right. So, we're coming into a brand new year, which is a great opportunity for a fresh start and even kind of reflection of the year past and looking at ways we can fix mistakes maybe we made there. And then going into a new year and ways to make sure that we're not going into 2021 going, oh no, I did it again, right? So today we're going to be talking to Mark, Not Your Dad's CPA, and he is amazing. He's a reseller and he's also a numbers guy. He knows how to keep track of spreadsheets and stuff to make sure that you're making the most profit that you can make, that you're actually know what you're spending, where you're spending it, which really helps when it comes to like tax time, which I know is something that a lot of new resellers and even veteran resellers struggle with. So we're really excited to have Mark, Not Your Dad's CPA on. Welcome, Mark.
So Mark,
thanks, happy to be here.
Sorry. So, hey, tell us a little bit about it. We have a lot of new listeners that, maybe I've never heard of you. I know you are like the tax guy in the reselling world, but hey, introduce yourself. Tell us a little bit about what you do and where they can find you and what's going on.
Yeah. So my name is Mark Tu, and I'm a CPA, and I specialize in e-commerce. So, most of my clients sell on eBay or Amazon or Poshmark or some platform. Not everybody, but, that's what I specialize in now. And I have a small Amazon FBA business on the side with a partner. It doesn't take too much of my time, but, that's something really cool to have. And it gives me, a lot of insight into what all you guys are dealing with, and helps me feel more part of the community. But yeah, so I'm based in Utah right now. Got a family, a bunch of kids, and it's just a fun community to be part of.
Yeah, that's awesome. And it's really cool that, like you said, so you're primarily like the numbers tax guy kind of thing, but you also on the side, you're doing the reselling, which gives you like the empathy with your clients, right? Which is what I think a lot of people miss, because this is a unique field. And I'm sure there's some things that are the exact same with any other business. And there's probably some things that are a little bit different. And the fact that you're hands-on in it, you can kind of relate to to your clients and to other people who are doing the reselling. So could you tell us a little bit about your reselling? Like, how did you get into that? What does your model look like? How does that work?
Yeah. So you sent me that question, and I was, I was curious because I went back and, I have my financial record. So I opened up my QuickBooks and, made a profit and loss by month to see like when we formed the LLC, when we made our first product, like when we had our first sale. Because I couldn't have told you that off the top of my head, but when was it? So like, I don't know, 3 or 4 years ago now, like, so my friend, one of my best friends, had a brother-in-law who was selling a product through Amazon FBA, just like one product, and he was making profit $5,000 or $6,000 a month.
Wow.
And we were just like, what? Like, we thought that was crazy. So for like a year, we just talked about it like, oh, we got to do that. Oh yeah, we got to do that. But we never did anything. So one day I was like, okay, we're doing this. So I formed an LLC because he and I are in a partnership together, and we just wanted to start it out that way. And then it was like, that was in like late 2016. And then we didn't even do anything for like 6 more months, So like we really dragged our feet. So then we started getting our first product samples. Like we were looking for a product that we could sell online. So we had a few manufacturers in China send us samples.
So you're talking about private label, just for all the new resellers, you're talking private label.
Yeah, this is a basic private label model. And then we actually ended up changing the product we wanted to do. But anyway, we eventually found a manufacturer. So between the time that we formed the LLC and the time that we actually got our first shipment of inventory of this one product, it had already been a year.
Oh, wow.
And then it was like 3 more months before we had it on Amazon and we're having our first sales. So like in our first month, I think we sold 30 units. And we were like, hey, that was sweet. You know, like we just sold 30 units by just making this really simple listing. And, you know, a few months later, we decided to add a few more products. So let me see. Our first sale was in November of 2017. You know, so it was like $300 we made that month, and now we're at like $8,000 or $9,000 a month.
Wow.
You know, which isn't a ton. We're at like 10 to 20% profit margins. So, you know, for 2019, I think we made like $8,000. But, you know, this is a business I only spend like, I don't know, 1 to 2 hours on a month.
Right.
You know,
yeah, that's nice.
And we really haven't put that much time into it. Like I have a friend who started on Amazon full time the same time I started. But you know, he's ready to sell his business for like $1 million because he's actually been putting tons of time into it. So there's a lot of potential there, and it's not something I put a ton of time into, but it's you know, it's kind of cool, you know, for a lot of different reasons. But that's what my business is.
Well, I know this isn't, you know, private label directed episode, but it's good to hear in the sense that you're talking a 10 to 20% margin. So real quick, we'll move on into the tax stuff, but you know, you're talking about there's a lot of overhead such as pay-per-click. Are you doing some of that? Getting the product itself? Is that pretty much what's eating up your 80%?
I mean, the product cost, you know, the cost of the inventory. I mean, a huge chunk are the Amazon fees, the Amazon FBA fees. And then, yeah, we're not very good with our advertising, but yeah, I mean, you can easily have all your extra margins eaten up by your advertising campaigns.
Interesting.
Yeah, for sure. One thing that kind of resonated with me with what you were saying is you mentioned it from the time that you made your LLC to the time you actually were making your sales. There was a good chunk of time, like over a year in that. So I think what a lot of people, because we're really big on Peerless Podcast of not selling like the dream of like get rich quick. You're gonna find something. Let me teach you in 2 minutes how to make $50,000 a month. And clearly it took a lot of research and planning. So even though you're only putting in like an hour or two a month now, you probably had to you spent some time and you did your research and you just get right into it. Is that kind of the norm, what you see with most of your clients, or do you actually find the people who are just actually getting rich really quick?
Interesting question.
Yeah, no, I see a whole spectrum. You know, I see people who are losing money, and they may or may not even know it. You know, people who are just breaking even, and there are some people who are doing really, really well. All different models. You know, retail arbitrage, like some people doing FBA stuff. You know, some people doing drop shipping with Shopify stores. Like, there's so many different models that people are being really successful with, and some people are not being so successful with. And we'll probably get into this later, but one of the main reasons they're not being successful, usually they don't even know it. And it's because they're not doing a good job tracking their numbers. And if they were, that would give them the insights immediately, and they could look at it and say, oh, I lost money this month and the month before. You know, this trend is not good. What's going on? And then you investigate what's driving that, and then you can make decisions that can change your course, change the course of your business. So that's something that I talk about a lot.
All right, so you piqued my interest a little bit. I don't know how much you can share. So out of all the models, which do you find people have had the easiest time picking up and going with it, and actually, you know, making money and not just breaking even or, you know, having a loss?
Yeah, that's a good question. Like, I don't consider myself an expert.
No, we get that. None of us are, but well, you might be in taxes. But as far as this goes, what are your thoughts?
Yeah, I mean, I'm just an observer. Like, I mean, the easiest, like, anybody can go out to Goodwill and well, maybe not anybody. Like, I wouldn't have any idea what would sell. You know, like a lot of these people go out there and they're just flipping through the racks and they're like, oh, this will sell for $80. Oh, this will sell for like $52. And they just know, like I couldn't do that. So that's not necessarily easy. I don't know. Like, it's hard to know. A lot of people say private label is not the way to go anymore, but I don't know. If starting a private label business right now in 2020, I just think, I read this article that talked about the gig economy. Everybody has a side gig, and it said that it estimated that 1/3 of working Americans have some type of side gig, some type of side hustle.
Wow.
And I think a lot of those are resellers.
Huh.
And, more and more is continuing to go online. And, the pie just keeps getting bigger and bigger. So I think there's opportunity in each of those models. But yeah, I don't have a good answer as far as which is the best or which is the easiest. I don't know.
All right. We always have our disclaimer that, whatever we say can't be taken for anything.
Yeah.
So
we're not legally responsible for anything.
Yeah. So that's why we asked you, because, I'm interested. It's funny because I find that there are different people. There are some people that with Amazon, right from the bat, they're just able to take off. Right. And there's others from eBay. Right. So that's what piqued my interest, because you say you run the gamut. You're talking about you have drop shippers and Shopify. I didn't even think about that. That to me, that sounds like a huge mess with like taxes and how do you deal with that? And you got different states and, it just sounds crazy. Anyways. Okay. All right. Let's get into the taxes a little bit. So my question was, retail and buying and selling has been around since the beginning of time. And so my question is, what makes, e-commerce different than brick and mortar? Is there a difference, or is it much of the same, just with some nuances?
Yeah, that's a good question. I mean, there are definitely some differences, but overall, from a high level, they're really not that different. Like, they're more similar than not, I think. They're both inventory-based businesses. Like, that's the main thing. Like, people always ask, well, they'll ask a CPA, do you do e-commerce? But really what they should be asking is like, are you able to help me with my inventory-based business?
That's a great point.
And I mean, if they are familiar with a brick and mortar inventory-based business, then they should be able to help you with your online reselling business. But a lot of the times it'll be intimidating to them. They're like, oh, eBay, I have no idea how to do that. But really, it's not that different. It's just like anything. It's having a familiarity with some of the details. Like, one benefit of going to a CPA or somebody who's familiar with reselling is, they'll be familiar. They'll know. I mean, a lot of times I'll ask somebody for some type of report or some type of information, and they won't know where to get it. And I'll say, oh, just go to Seller Central and download this report, and that'll have what I need. And it takes like 2 seconds. But, if I weren't familiar with Amazon, I'd be like, I don't know where to get that. Just, I don't know. Yeah. Do your best.
It's funny. I had to Google, like, when I first was doing tax with Amazon, I had to like Google, and then I found some Amazon sellers that had come through it. So I get it, because really, if somebody's familiar with it, it makes it a whole lot easier. Because I would say that was like a 3-hour process for me to find the exact numbers I was looking for at that point in time. So
yeah.
So I get that.
So what about, now I know you're a CPA, you're obviously professional in what you're doing. You know how to make sure that when people are doing their taxes, they're doing it properly. They're getting the write-offs that they can get. They're not over spending, but they're also not underpaying, so they're not, the IRS isn't coming after them. I've always pretty much done my own taxes. Even my wife was an independent contractor for a while, and so we had to like go a little bit step further. We had to buy like the deluxe TurboTax. Is reselling something though where you would say people should definitely get a CPA, or is there a level, like a certain point at reselling where it's like you can maybe do your own taxes here, but after a certain point, is there like a threshold where it's like you maybe should see a professional?
Yeah, there's no threshold, but I don't know. I'll say if your sales are above 10,000, you should at least start thinking about it, just because it's not impossible, but it's difficult to mess up a tax return that just consists of like a W-2 or maybe 2 W-2s. But once you introduce some type of self-employment like reselling, all of a sudden you have a separate Schedule C, which is your business schedule that has your sales and your cost of goods sold and all your different expenses, mileage, home office deduction, and the possibility of making a mistake just goes way up. And so does the opportunity for additional savings. So it just increases the likelihood of making mistakes. So it really is just about your risk tolerance, like how uneasy do you feel about it? Like, I don't know, are you wondering if maybe you're making a mistake? I don't know. There's a lot of things that go into play.
I'm going to pose I'm going to make you choose. So of the two, what should resellers be more concerned of? The amount of money they may be losing by not doing their taxes correctly, or the possibility of being audited? Which should be the greater fear for a reseller?
Just that you're missing out on money, leaving money on the table on your tax return, just because the likelihood that you're going to be audited is so small. And even if you are, the IRS is just going to look at one tiny piece of your tax return. Like, they might send you a letter that says, hey, you've been selected for an audit. We're going to look specifically at your mileage deduction and your office supplies. Send us some type of documentation that supports the deduction that you're claiming. And if you have some support, you send it to them, and that's the end of it.
Oh, so it's not like Jerry Seinfeld. Like, when Seinfeld got audited, he needed I don't know if you watch Seinfeld at all, but he needed every single receipt for like every meal. And that's all he did. He spent like 2-3 days. They're like, oh, they won't leave me alone. They want my lunch receipt from, 1029. So it's not like that then. Is that what you're saying?
No,
Okay.
No, that's hilarious. I haven't seen that episode. I have to go back and I'll have to check out some of those clips.
Well, thank you for saying what you said about audit, because honestly, that's always been a fear of mine. I've known a few people who've been audited, and for the most part, it seems like it's been an okay process for them. But yeah, like you often hear horror stories and you see things on movies and TV shows where it seems like if you're audited, your life's coming to an end. Even if you try to do everything right, like they're gonna find something, like they're out to get you. But from what you're saying, like, one, the risk factor and the likelihood of being audited is low, and then it's not such a scary thing. So I think that's something our listeners will probably appreciate a lot too. So thank you.
Yeah, it's not like somebody's coming to your house and just tearing apart your whole business. Most of them are done by mail.
The Warrens.
Yeah.
Okay. All right. So, so along that line, so one of the questions we get a lot in the DMs, I mean, I would say probably every week I get this question is, hey, Orlando, or hey, Mike, I don't make that. This is just a hobby. I don't even make 20K, or we've had some other sellers go, I purposely don't make more than 20K so I don't have to report my taxes at all, ever. What are your thoughts on that? Like, is there ever a time that, I know what the answer is. I think we all know, but
there's an ethical answer. Yeah.
Well, okay. But let's say, it sounds terrible. Let's put ethics aside. All right. I know, but what is the reality? When does the government expect you to report your sales?
Yeah, technically your first dollar of profit is taxable. So, like you said, you're not going to get a 1099 from PayPal or from Amazon if you sell less than $20,000 and have less than 200 transactions. But that doesn't mean that your sales or your profits are not taxable. It just means that the IRS won't know about them. So, you could potentially fly under the radar for a while. And a lot of people do, most of them unintentionally, some of them intentionally. But, eventually the IRS, I don't know what the likelihood is they'll find out, but it just comes down to like, okay, do I want to risk that or not?
Yeah. Do you want to sleep better at night? In California, we're required, even if I sell something on Craigslist that's cash based, like I have to report that. Once I get a seller's permit, well, even before that, but I'm required to, every single transaction, they have to know about it, and they want sales tax. Now, there is an ethical line where you decide, are you going to be an ethical person and pay, because we all sign up, when when we're born as citizens to, pay our taxes, which, we're not fans of, but it is what it is. So, okay, enough of my diatribe. All right. So what would you say, I want to ask a question about differences between part-time and full-time. But before I do that is, we have a lot of people that are just brand new. Maybe they just started reselling in the last month. Because we have a lot, especially now that we're on TikTok, we have a younger audience that just like they're in college and they're just reselling and they haven't even thought about it. And now, they've been reselling for like the last 2-3 months. Here comes April. What are some non-negotiables that they need to be aware of as they start reselling as far as record keeping?
Oh man, I wrote something down for this. Let me see.
It's on there somewhere. Because, it's kind of, it's one of those things you don't think about. You sell on eBay. Like if a job, it's easy because you have a W-2 and everything's taken care of for you. But when you're a reseller, like it's on you. So did you start doing that right away, Mike?
No, I mean, because there's that switch between.
They might be listening, by the way.
Where this is like a hobby to like, okay, this is more of like a business. And so, knowing that you got to keep some records, but when it's just a hobby, you're not necessarily tracking your mileage. You're not necessarily tracking every single expense and packing supplies and stuff. And then all of a sudden it's like, wow, I made a lot of money this year. Maybe I should have kept that receipt from Walmart for that bubble wrap,
Well, and I think you feel it, and Mark, just let us know when you found your answer.
I'm fine. I got it.
Okay, but I just want to share something real quick is you don't realize it until there's that one time you do your taxes and you start owing a lot of money and you're like, what did I just do to myself? No, I'm serious. I mean, that was my first year. And I remember I think I amended, I don't know what I did, but I went back and I found every single piece I could. I still ended up owing, but I know I lost a lot of money that first year because I wasn't careful about tracking my information. All right, now, Mark has some better advice to share with our newer resellers.
No, it's not even better advice. I mean, exactly what you were saying. So the one of the best things you can do is just to separate your business activity from your personal activity. And the easiest way to do that is just to get a separate account, link it to your PayPal, link it to your Amazon, just have all your business transactions go through there, any credit card payments, all that stuff, because then it'll just make your taxes easier. It'll make your bookkeeping easier. And that's the biggest thing. Like it starts with like having a solid accounting or bookkeeping foundation. And ideally, you're doing it at least monthly and you can see what your numbers are. You can assess your profitability and you can, again, make those decisions that are going to take your business where you want it to go. And then at the end of the year, the icing on the cake is that you're going to have everything ready for tax time. It's just going to be there. You're not going to have to scramble to put everything together. So many people think that record keeping is just for taxes. Like, oh, I got to keep track of my stuff so I can do my taxes at the end of the year. But for me, that's secondary. Like you want to be keeping records so you can be a successful business person.
Right.
I mean, because those numbers are telling you a story of exactly what you should be doing to, grow your business. But yeah, you reminded me of, an experience I think probably most of us had. So when I was in college, one summer I did summer sales in California, pest control. And, I think I made like $10,000 that summer, which was pretty good for a 20 something year old.
Yeah.
And when I was, doing my taxes, I owed like $1,500 or something that just seemed like so much money to me back then. And there were penalties. And I was like, what? Like, how do I owe so much? And why are there these penalties? And, it's because of self-employment tax and all this stuff that I didn't know about. And, probably millions of new business owners have that same experience every year.
And is that kind of what I don't want to assume, but is that what got you into accounting? You're like, look, all this money here, I'm going to do this right from now on. Did you just like have a love for money after that and kind of keeping numbers, or was that something you've always been interested in?
Not necessarily. I just kind of went to business and then accounting because I don't know. I didn't want to do science and I didn't want to do math. And I just sort of ended up there.
Nice.
Well, you're in a good place and you're here to help us all. So
that's right.
Appreciate that.
Now you mentioned like the bookkeeping and having a separate bank account. And I remember the day that my wife and I opened up our business bank account, like we did a little celebration, like, man, we're doing this for real now. Like this went from a hobby to like a business. Now, there's a lot of programs people use. You mentioned QuickBooks at the beginning. And I know you also have like some spreadsheets. I hear your name come up all the time in the community. People are using, sometimes modifying, but often using like some spreadsheets that you've made for keeping track of inventory and that kind of stuff. So would you mind maybe sharing a little bit about those tools and other tools that might be available like QuickBooks that people should be using, especially, I mean, this is a brand new start, even some veteran resellers who maybe haven't did very well with, bookkeeping and accounting before. Like, what are the recommended tools that you have?
Yeah. So, I'll back up a little bit. So when, with inventory, so historically, the way that you have the required way to deduct your inventory has been when you sell it. So you purchase your inventory and it becomes an asset on your books. And then when you sell it is when you can deduct it. So that's always been the rule for retail businesses generally. And, that changed a little bit just last year when the tax reform went into effect. So now we have the option to deduct our inventory when we purchase it. So that's the cash method for inventory. And I think that was maybe an unintentional result of the legislation. But backing up to the original way, which is still the way that I recommend, because it helps you assess your profitability more. So when you deduct your inventory, when you sell it, then you're matching that deduction to the associated sales.
Right.
So it's like just a more accurate profitability. So in order to deduct your stuff when you sell it, you have to keep track of your inventory. Like you have to keep track of how much it costs. So then when you sell it, you can add up all those costs of goods sold for that month. So that's what my spreadsheets are intended to help people do. They're basically inventory trackers that help you manage your cost of goods sold. And I found that it's generally easier to manage or to keep track of your inventory in a spreadsheet, at least when you're starting out, rather than within some type of bookkeeping system like QuickBooks, because it just gets really tedious to enter things in individually. So what you do is you keep the detail offline in a spreadsheet, and then monthly you just update your inventory and your cost of goods sold numbers in total.
Nice.
So that's what a lot of new resellers end up doing, is having a combination of maybe an inventory spreadsheet and a bookkeeping system like QuickBooks or like Xero, or Wave Accounting is a free one. GoDaddy Bookkeeping is a simpler and cheap one. QuickBooks Self-Employed is like GoDaddy Bookkeeping. Like there's a bunch, and there's no one size fits all. You kind of have to find the one that works best for you. Not everybody's comfortable with QuickBooks Online. There's a lot of different capabilities, and it's too much for some people. So it just depends.
Nice. And where could people find your spreadsheets if they are interested in looking at those, maybe using those as either a template or just using it completely?
Yeah, so I've got a couple free spreadsheets, and they're on my website, notyourdadscpa.com. And I think I have a section just called resources for online sellers. And just on that page, you can go there and download them.
Nice.
All right. So I got I guess an example or scenario to run through you. So let's say, there's an individual, like, somebody like Orlando in an alternate universe, and he sources a lot. So, he'll go a whole day and he'll source maybe 200 items. But then the next day he goes to a garage sale and he does a bulk buy and he ends up buying another 200 items. Right. And then another deal, like somebody texts him and says, hey, come on over. I need to offload this stuff. And they go over and they pick up another 300 to 400 items. Right. So we're talking about a lot of stuff within a few days. Would you, I would say, I'm guessing you would say that you're talking about the accrual method. Is that what you're talking about when you're talking about counting it when it sells, right? ACCRUAL. I think I spelled that right. And cash would be, you just count the cost of all that stuff, right? And whether it sells or not, you can still count it. Is that what we're saying here?
Right. Still just deduct it all at once. Yep.
Okay. Now, that wasn't always the case. So I know I think I've done accrual this entire time, and it is cruel. Like if you don't do bookkeeping, like it's a pain. So, but what I'm hearing you saying, and I just want to make sure I got this right, because I know there's a lot of listeners out there that are not as intense as Mike is, and are like a lot like Orlando, who, because I struggle. Like I'll buy, a huge bulk buy, and there's little trinkets in there. There's, I'll give you an example. I bought a whole railroad bulk buy, right? So there was railroad cars, there was tracks, there was trinkets, there was junk that I sold on the side. I offloaded this for cash. This sold on eBay. Some went to Amazon, and it's like, it's all over the place, right? And I think about the hours that bookkeeping would keep. Now, I've done it, but it's a pain. So you're saying cash could save you time, but you will lose money. Is that what we're saying here?
And you won't lose money. It's just a timing issue. I mean,
Okay.
you'll deduct everything now, but in the future you'll be you won't have that deduction to offset your sales. So, you'll save on taxes now, but you'll be taxed more later. And if you were doing it the other way around, then it would just, be switched. So it's just a timing issue.
Yeah.
Okay, so you
pay
do
now or pay later is kind of the
true, but you do have to have a set number January 1 of what your inventory is, correct? To actually track that correctly. Am I right about that?
Yeah, I mean, you could just track everything individually and just add up the cost of goods sold as you sell it. So then you'll just have your exact number. But there's another way to track it where if you know your beginning inventory number and the amount of your purchases, and then your ending inventory number, if you subtract that number, then you can calculate your cost of goods sold that way.
Okay, so
kind of just like an average.
I feel like we're putting in the hot seat, Mark. So tell me back off if we are. All right.
No, it's all good.
So I'm just throwing it because this is a problem I ran into. I think my second year of really, this is my like 7th year of really reselling, second year full time. But my second year, I remember going to my tax person, and now we're good. Like she understands how things work, and I know what she wants, and she yells at me every January. And I remember she's like, "Oh, so how much inventory did you start with?" And I'm like, "What? What do you mean? Like I don't know." Like she's like, "Did you buy all this stuff last year?" I'm like, I don't know. I've had stuff listed for like 4 years. Like I don't know where to start. So what would you tell that individual that, just now they're realizing that they want to go accrual method and they have like 4 years of inventory that they don't even know how to process that? I mean, they have hundreds of thousands in storage units and so on.
Yeah, I mean, sometimes you just have to. Sometimes there is an element of estimating. Like sometimes you have to make an estimate, and that's the best you can do. But usually you can come pretty close by just piecing together whatever records there are, whether that be bank statements or receipts, or I feel like I can always get it within at least 80%. And if you are using the accrual method for inventory, there are different ways of tracking it too. You don't have to track everything individually. You can use more of like an average costing method.
Oh yeah, I've seen that. Can you explain that for our listeners?
I mean, it's easier if you're actually looking at, like I have an average costing spreadsheet. So that's one they could check out. And I have a video linked to it. It's just a 3 to 5 minute video. And I show you how the spreadsheet works. And as you see it, you're like, oh, okay, I get it. It just kind of, it tracks what the average cost is of everything you've sold. And it just kind of moves up and down as you enter, the new purchases and the new sales. But you're not entering individual items. You're just entering the total quantity sold and the total like amount. I think I'm getting that right. But
okay.
Yeah, they can check that out if you want.
Nice. And so what I'm kind of hearing from you is with the accrual method, one of the benefits besides just the fact that you're getting the deductions now. So it's not like you're potentially like, hey, I saved a bunch of money on taxes this year, but the next year, like, wow, I sold all this stuff that I've already took the deductions for, so now I owe a lot more. So another benefit though is just the information that you have week to week or month to month of like you said, being able to spot the trends, being able to say like, hey, maybe I'm selling electronics and I'm actually starting to lose money here, but I'm making money in clothes. Whereas if you're doing the cash method, you might not have as much data or inventory to use to kind of guide your purchasing and selling strategies. Is that correct?
Yeah, totally. Yeah, because if I'm using the cash method and I go out and buy $10,000 worth of inventory, I don't know if I don't make any sales that month, I'm going to show a $10,000 loss. Did I really lose money that month? Not really. I stocked up on a bunch of inventory that I'm eventually going to convert into sales and cash. So it's not as representative of your profitability.
Okay. And one more question on it, because this is, I don't know, you've seen it. You've seen this. I've seen this on forums. This is the most debated. Like if you go to Reddit and people are talking taxes, accrual, no, you can't do accrual. You can do cash. And actually the fact that this just changed is a big deal, because I think up until that point, it was only accrual. And now you're saying that cash is possible. So I know the question that some of our listeners may be thinking is, can I switch? And how often can I switch?
Yeah, it was already confusing. And like, you wouldn't believe the amount of hours I spent like reading just this really painful literature and stuff. And I wrote, I put a blog on my website just to write this article about if you can expense your inventory when you purchase it. And, that one blog post gets a ton of traffic. And I've updated it since they changed the laws. And I feel like I have a pretty good handle on it. I'm trying to remember what you asked me. I was going there.
The question is, can you switch back? Can you switch, and how often can you switch?
Yeah, so you can switch from accrual to cash or cash to accrual, but technically you're supposed to fill out this. It's called a Form 3115, and it's just like this crazy long form, and it's really complicated because it accommodates a lot of different things that you can do, and one of them is this switch. But yeah, technically you have to fill out this form and submit it with your tax return. And I want to say you can't switch. I mean, once you change, you can't do it again for 5 years.
Wow.
And I mean, honestly, most small sellers who do switch, they probably don't fill out that form, and nobody ever knows.
Now, when you say small seller, is there a threshold when you say small seller?
No, I mean,
or like under 100K. I mean, you know what I mean? Sky's the limit, because for somebody, 10K is a big seller, or 100K or $1 million is. So are we? I'm gonna force Mark into a number. Is it under 100?
Yeah, under 100, under $1 million.
Small seller.
Yeah.
Okay.
We're always going to be
business.
small fries, man.
No, I'm good with that. I'm good with that. We're helping people with the side hustle and go to full time. All right. Hey, thanks, Mark. All right, I got more questions, but Mike does this.
Okay. Yeah. So just real quick. So I'm really good at like keeping receipts and things like that, especially when it comes, or I try to be when it comes to like getting inventory, if it's ever retail arbitrage or something like that. Now, one of the problems we run into, and I have a solution that I think works okay for me, but maybe you have a better suggestion. So when it comes to like garage sales and I'm picking up inventory, what I'm currently doing is I've got a little like receipt book, and I plan out my route. And sometimes I'm stopping at 20 or 30 houses, and I'll just write down the address of maybe 2 or 3 of the houses. Even if I buy things at 6 or 7 of the houses, I try to keep track of just basic notes of the items and the amount I'm spending, and then I file that away. So it's not like perfect, like this pair of shoes came from this house. But is that an appropriate way of having receipts for things like garage sales where you're not getting a receipt from, or is there a better method for doing that?
Yeah. So especially with cash purchases, I mean, you can only work with, what you got. Like the best you can do in those instances is exactly what you're saying. Like keep a little logbook. Write what the item was, where you were, how much it was, the date. And I think for that kind of stuff, that's all you need. And really, I mean, it's good practice to keep some type of substantiation or documentation for all your purchases. But technically, you don't actually need receipts for items that are less than $75.
Okay.
With the exception of lodging. But it's funny because I mean, generally you do want some type of documentation, but it doesn't necessarily have to be a receipt.
Mm.
So just like a day or two ago, I posted on Instagram this post that said, you don't need receipts.
Oh, I saw that.
And, one girl, she said, this is misleading. And I said, well, I mean, it's just meant to dispel the misconception that you have to have a receipt. Like, it doesn't have to be a receipt. It could be a bank statement, or it could be an invoice, or just like something that you didn't create that shows that transaction is legitimate.
So Instagram story wouldn't count. I'm just I just joke around, Mark, because for the last year I've done every garage sale with the Instagram stories. So I'm like, hey, if I ever need a track and I forget something, I'll just go back to my IG archive, and that's how much I spent.
Can you imagine sending the IRS like hundreds of hours of Instagram stories and like, here you go? Like,
just saying, hey, it's 2020, All right, sorry.
I don't see why not. I mean, they're just trying to get evidence that transaction actually took place.
There you go. Right. See?
Maybe that's not a bad idea. Even like when you get into your car and you throw the stuff in, like just real quick video, like bought these items.
I do it at the end of recap of every garage. I'm like, I paid this much for this stuff. This is what I think it'll go for. So, Yeah. Anyways. All right. So Mark, question, is there a difference? And I know the answer, but this is all rhetorical. We're all learning here. Is there a difference between the way a part-time seller and a full-time seller should approach taxes?
Yeah, I mean, they're not too different. You're both going to have to pay income tax on your profit. You're both going to have to pay self-employment tax. If you're full-time, in theory, you're making more money, so maybe you'll owe more tax. So one implication, like if you're only a part-time seller, that implies that maybe you have another full-time job, and maybe at that full-time job you have access to employer-sponsored healthcare. So if you do have access to employer-sponsored healthcare, you're not eligible for the self-employed health insurance deduction.
Mm-hmm.
I think that's right. So, if you're a full-time seller, then you can deduct your health insurance premiums that you pay as part of the self-employed health insurance deduction. So there are a few things like that could make a difference.
Now, for instance, somebody like me, so I have a full-time job and then I kind of do this on the side. So when I do my taxes, do I still have to do self-employed taxes for selling stuff online, or is that only if that's your only source of income?
Yeah, same thing. Like you'd be subject to self-employment tax. You'd assuming you're both sole proprietors, you would have to fill out a Schedule C on your individual 1040 tax return, which is for self-employment activity, whether it's part-time or full-time. I don't think they make a distinction.
Mm-hmm. Right. But there's also the estimated tax that a full-time seller they should be paying every quarter, correct?
That's a good question. So
can I stop you real quick? It's interesting because there's no definitive black or white answer.
Yeah, taxes seems like a kind of a gray area where you got to kind of navigate depending on situation.
Oh, it's driving me crazy because I'm not you, Mark, but it's just I get it because I go through this every year. Like, can I deduct this? Well, I don't know about that. How about this? And it's just, anyways, okay, go ahead. Sorry.
No, I get it because every time, I deal with that every time somebody asks me a question. I want to give them a simple answer, and I'm like, okay, how deep into this should I go? So you could be a full-time reseller or a part-time reseller and still technically be required to submit quarterly estimated tax payments. So when you have a full-time job, your employer is withholding income tax and Social Security and Medicare from you, and they're submitting those taxes on your behalf throughout the year. So then when you start reselling or when you go out on your own, that responsibility is now yours. You're supposed to submit those taxes throughout the year. And you do that in the form of quarterly estimated tax payments. So let's say you're a part-time reseller, you have a full-time job, and maybe you're doing really well with your part-time reselling business. Even though you're having taxes withheld from your full-time job, you still might owe quarterly estimated tax payments from your reselling job
Mhm.
just based on the amount that you're selling.
It's terrible.
You know,
Sorry. I went through all this when my part-time became more than my full-time income, and it was a mess. So go ahead. Sorry.
Yeah. So the simple rule of thumb there is if you're gonna owe more than $1,000 of income tax, federal income tax at the end of the year, then the IRS wants you to pay that throughout the year.
Okay.
And if you don't, you might be subject to some penalties. And there are some exceptions to that. But there's always exceptions.
Yeah. So we talked a lot. I'm sure we'll talk more about the negative aspects of having to pay into taxes and things like that. But there's also, like you said, the benefits of having your own business and the different write-offs. What are some of the main write-offs that resellers can use? And then what are some of the ones that maybe people aren't actually writing off because they don't think about it?
Yes. I mean, the biggest deduction generally for resellers is going to be your inventory. So in the form of cost of goods sold. So that's why inventory is such a big deal and why you want to make sure you have an accurate valuation or accurate cost of the inventory that you've sold, depending on the method that you're using. Another one that has a lot of potential that a lot of people miss is just your mileage. So many people are out sourcing inventory in other cities, maybe other states, and they're racking up all these miles, and sometimes they're not tracking them. And it's so easy these days because, in the olden days, you had to keep a logbook and you had to write where you started, your destination, like odometer readings, like how many miles, location. And now you can just get an app that does all that for you, and you don't even have to think about it. So it's so easy to keep track of your mileage. And let's see, in 2020, you get 57.5 cents per mile. Last year was 58 cents per mile. And you drive 10,000 miles a year, which a lot of my clients do. That's a $5,800 deduction.
Wow. Yeah, that's good. And one thing that I'd maybe tell our listeners, because I went through this, I last year ended up getting an app like that so I can keep track of my mileage. But there was a long period of time that I wasn't tracking mileage. But luckily, and I know every phone is different, but on my phone, I have an Android, so I've got Google Maps installed, and I never deactivated for it to just automatically history for my maps. And because my GPS is on, I'm able to go back day by day at certain times, and it shows you your exact route. So maybe that's something people can do too, even if they weren't tracking their mileage, is they can just look at their history on their phone's maps. And a lot of times it will show you times, where you went, when you stopped, how many miles total. So that might be a useful thing. Now, when it comes to like write-offs, like, okay, mileage they can do. What about other things like eating out, things like that? When is that able to be a tax write-off? And when is it like, sorry, that's just, you're buying lunch. You can't write that off.
Yeah, meals is a big one. I mean, generally, if you incur an expense in the course of your business, it's going to be deductible, but meals is sometimes the exception to that. For a meal to be deductible, it has to be, or typically has to be it can be part of either like business travel, when you travel outside your city and you have an overnight stay somewhere. If it has a business purpose, then that's going to be, those meals are going to be deductible. Or if you have some type of business meeting, meeting with a business purpose, and it can't be by yourself. It has to be like with a partner, an employee, or a client or something. So that means that most of our meals are not deductible because we go out sourcing and we stop at, Chipotle or whatever. Like, you're not outside your city and you're not necessarily having a business meeting. So those aren't going to be deductible.
Okay. See, that's why I eat best when I'm on the road. So yeah. I always go to LA and it's good,
And then you get your tax write-off.
I eat well in LA. All right. Hey, so I had a question, and again, I know we're dealing in the unknowns at times. So eBay, this last year said they'll be collecting taxes, right? Amazon has said the same. So can you explain what that means for those new sellers? Because sometimes we'll sell something and it'll be grayed out how much they collected. And sometimes it's not grayed out and it ends up going into your PayPal. So can you explain some of that?
Yeah, so that has to do with sales tax,
okay,
which is completely different from income tax.
Okay.
The states want their cut of your sales. Most states have implemented what are called marketplace facilitator laws, and those laws require that the big platforms collect and remit the sales tax for us, whereas before the responsibility was technically on us as the sellers and not the platform. And I guess they're saying that the platforms are the sellers, so they should be the ones collecting and remitting the sales tax. So there's just a few states at this point that don't have those in effect. Like I know Florida is one of the holdouts. Like eBay and Amazon are not collecting sales tax for people in Florida at this point, at least for their Florida sales. Yeah, I don't know. For most of us, we don't have to worry about it anymore. I don't know. I don't know how much detail you want me to go in, but like if I were in Florida, if I made a sale to somebody in Florida, technically I would be responsible for collecting that sales tax and sending it on to Florida. But if I'm in Florida and I make a sale to somebody in California, then I don't have to worry about that.
So we have a lot of, obviously we're based in California and we have a lot of listeners from California. So in California, it used to be that every January you had the controller would send you this thing and say, hey, pay up your sales tax. So are you saying that, and you can say, you can say, I don't know, but in California, is that no longer the case?
Wait, what would they send you?
So the controller, it used to be a different office. Now it's I think it's the state controller sends you something and says, hey, you have to pay sales tax on your eBay sales, right? So, but eBay is supposed to be remitting, I'm thinking that's the word, right? The taxes. So is that no longer the scenario with eBay and Amazon? Is that what we're saying? Like if a state similar legislation?
Yeah. So I think California went live in October, I think. So
that's right.
And for people, well, so here's the complication. So if you were already registered for sales tax, even though the platforms are doing the work for you now, California is going to see that you're registered and they're still going to expect you to file a sales tax return, even though you're not going to owe any sales tax.
Okay.
So
good old California.
Yeah. California went after people, man, for a lot of that stuff. But like if a lot of people work with wholesalers or vendors, and if you show them a reseller certificate, then they're not going to charge you sales tax because you're buying it for resale, and the ultimate customer is the one who's going to pay the sales tax, or you're going to collect it from them in theory. So anyway, if you want a reseller certificate to avoid paying sales tax, to get that certificate, you have to register for sales tax.
Correct.
Even though the platform is doing all the work for you and you don't owe sales tax, now the state is going to expect you to file a sales tax return, even though you're not going to owe tax. So it's just kind of like it's a check in the box kind of thing. It's the price you got to pay to have a reseller certificate and avoid paying sales tax on your inventory purchases. I don't know if that made sense, but it's crazy.
I know, but let's say you did pay the sales. Let's say you didn't get your reseller certificate. That sales tax can be counted into your cost of goods, correct?
Yeah. So if I purchase inventory and they charge me sales tax, that just becomes part of the total cost of my inventory.
So which is better? Is it better to have the reseller certificate and not pay it upfront when you're buying the inventory, or to have it be part of your cost of goods?
To avoid paying it, because if I can avoid paying $5 of sales tax, it's $5 I got to keep in my pocket, or it becomes part of the cost of my inventory and I can deduct it. But that deduction is it will translate into a portion of that
right
$5. You know what I mean?
No, it's super important to know. I mean, that's something I went through myself. I mean, not till this. I'm going to just admit it here because I'm always real, but not till this last year did I actually start putting my seller permit into use. And it's because of that reason, because of I started looking at it, I'm like, I lost a lot of money.
But it's not going to be relevant for a lot of people, because a lot of people are just going to Goodwill or Walmart clearance and buying their stuff there, and they're retailers, they're not wholesalers, so they may not honor your reseller certificate there.
No, very true, very true. And out here, there's things are becoming even more stringent as far as with the reseller certificate and all that. So,
All right. Real quick, just so, and I know it's very complicated when you're starting to talk about, lots of inventory, lots of money, lots of different, like deductions and costs and all of these things. But if we were just to give like a basic example, if someone were to have, let's say, bought an item for $100, they sell it for $150, and that's all they did for the year, right? So their net profit is $50. If we were to pretend there were no fees or anything like that, so they got $50. So when they pay taxes, are you've got the deduction, but are you paying taxes on the $150 minus some deductions that don't actually equal $100 that you're not paying, or are you only paying taxes on the $50?
You're paying taxes on the $50 on your profit.
Okay.
there you go.
Yeah. No, I just wanted just so for our listeners to know, like when they're why it's so important to keep bookkeeping and to know what the cost of goods were specifically. And so we're looking at the basically your net income is what you're paying the taxes on. So even if you're got a $20,000 worth of sales in a year, but only $5,000 of that is net, that's what you're looking at potentially doing the deductions from or having to pay taxes on. So it's not quite as scary as it might seem, like, oh, I'm gonna have to pay taxes on $20,000. Well, it's not exactly that, right?
Yeah, I mean, and a lot of people don't realize that. They'll ask me like, what can I deduct? Can I deduct my PayPal fees? I'm like, yeah, absolutely. Can I deduct my office supplies? Yeah, like you can deduct all your business expenses. Like that's what a business is. You're taxed on your profit. You want to deduct everything that you spend, for the most part. So, and you might even end up with a loss, which offsets your other income, from your day job, and you could pay less taxes overall.
Now, how long can you do that? Because I know when my wife was an independent contractor, it was kind of nice because we had money coming in, but we had enough deductions. I mean, we didn't scam the system or anything, but there was enough things like mileage is actually really nice. And I know,
appreciate you clarifying that.
But I know, like realistically, like the mileage deduction isn't like free money because you are putting wear and tear on your car. You're just gonna have to buy a new car sooner. All of those things. But there were times where it was like it came out as a loss for the year, but we had money in our pocket from the business, and we did okay. But there was enough of the deductions that it kind of came out as a loss. So, but I remember reading at the time that you could only do that for like 3 years with a business or something, and it might be different now. Before the IRS then says this is no longer business, you can't do this, it's a hobby. So, is there something in place like that where you can only do losses for so long?
Yeah, so it's called, I think it's the hobby loss rule. So if you show a loss 3 out of the last 5 years, the IRS might say, hey, you're not actually a business because look at all this money you're losing. So that's a risk. But if you can just show them, well, no, look, here's my books, I'm actually trying to make a profit on this. They're not gonna reclassify you as a hobby. And that brings up another good question, like what's the difference between reporting your income as a hobby and a business? So like a lot of people think, oh, it's just a hobby, so I don't have to report my income. But actually, any income you make from a hobby, you do have to report, and any deductions that are part of that hobby or any expenses you incur as part of that hobby are not deductible.
Oh, wow.
Yeah, so that's a big deal.
So you want to be a business, not a hobby.
Yeah. Bingo. Totally.
Now, I'm throwing this out there. So it's interesting. So 3 out of the 5 years. So let's say you have this. People are going to go, you're talking about yourself. I'm not talking about me. But you have a reseller. Sure. You have a reseller who has constantly been losing, right? They're reaching this dream. If they're full time, can the IRS really say, hey, it's not a business?
I mean, they can, but I mean, if you've been making any kind of good faith effort to like act like a business by, having a business bank account, having the right business structure, keeping your books in decent shape, then I don't think you'll have a hard time getting them to back off.
Okay.
Some businesses have losses for years and years and years. And I've never really seen that be an issue.
Yeah. I mean, I've you hear stories about businesses that it took several years until they finally started making profit. So I find it interesting that it's a 3-year limit where I've heard business. You hear that comment saying like it takes 5 years to finally break, and start making money. So I don't know. I thought it was interesting.
Yeah, where that becomes an issue is if, I don't know, maybe there's somebody who like enters like cake baking contests at the fair or something, and sometimes they win prizes, and to avoid paying tax on those prizes, they'll deduct all the ingredients or whatever on their schedule, their business schedule C. It's not really a business, so the IRS could look at that and say, sorry.
Yeah, especially if they're like really going crazy. Because I know there's some people who probably try and make money on taxes by doing things like, like I went on vacation and I entered this contest and I'm going to write off my airplane ticket and I'm going to write off this. And they're actually making money at the end of the year. Cause like, I had a $20,000 loss in my business and they've got a full-time job. And so that $20,000 loss offsets, the income tax for their full-time job. And next, they're getting a larger return. So I could see where the IRS would say, okay, that doesn't count.
So you can't go to a thrift store in Hawaii and just count that as a business expense. Is that what we're saying here?
No, I think you can.
I don't know.
I think you can.
I was kind of joking around, but I want to hear.
Oh yeah, when I drove up to Colorado. I actually drove through Utah a couple of weeks ago. And we were stopping on thrift stores along the way. We stayed the night one night in Nevada, both directions going and coming. And so we're planning, because the whole trip, and when we filled up our car, we filled up this bag on the top of our car. So we're planning on marking off, that mileage and that the inventory that we bought along the way, because we were sourcing places that we couldn't get. We bought brands. I mean, the jacket I'm wearing right now is something I sourced while I was out there. So, is that's an okay thing to do? Like if you're like, okay, I want to source new areas. I want to see, I hear there's good thrift stores here. Is that a fair thing to do, or is that maybe pushing it a little bit?
I mean, there are definitely ways you can push that. But, if I'm going to Hawaii specifically with the primary purpose of sourcing inventory that maybe is harder to get elsewhere, I can deduct, my plane flight over to Hawaii and my plane flight back, and any days that I'm out sourcing, from my hotel or whatever, I can deduct that round trip mileage. But if my primary purpose is to go to Hawaii and vacation, then I can't deduct the plane flight over to Hawaii. But if I source for a few days while I'm there, I can deduct that local mileage. You know what I mean? So it just depends.
So when you take the kids to Disneyland, go to a thrift store every day. Yeah, that's the goal.
Well, you'd have to say you're going to Anaheim to do sourcing. You can't be going to Anaheim to go to Disneyland.
That's true.
Bingo.
That's true.
Disneyland, the side activity.
There you go. All right. I love how we're getting to the details. All right.
Hey, that's the stuff that matters, man.
It is.
It's the details.
So I wanted to keep it paused, but I want to know what have been some of the biggest mistakes you've seen? I mean, I know it's been record keeping, but is there anything outside of record keeping that's like something that you clearly have seen resellers do that we should avoid at all costs? I know I'm kind of putting you on the spot.
Yeah, I mean, the biggest thing is just not keeping track of anything when you're scrambling at the end of the year. So, I mean, here's an example that happened just a few weeks ago. So somebody did their own taxes with TurboTax, which is usually fine. It usually does a decent job. But he had a couple of vehicles. So he had a few different side businesses, and he used his vehicles in each of them. And he tried to depreciate them in the business, I don't know, in each of the different businesses, but TurboTax didn't know how to handle that. So it only assigned the cars to one of the businesses instead of all of them. And I was looking at his tax return and it didn't look right. But anyway, we ended up amending it, and he got back $5,000 because TurboTax wasn't able to catch everything. So, they're really like specific things like that where people mess up and they have no idea. I don't know. Yeah, just
keep track.
Yeah, keep track of your stuff. There are so many different ways to mess up. And I think also it helps to just take a little bit of responsibility to learn a little bit about bookkeeping, about taxes. Like you don't have to know everything. You just want to learn a little bit so you can, I don't know, just have exposure so you can talk to your CPA about it or just, I don't know. It's going to, a little bit of education is going to go a long way.
I think that's great advice because no matter who you run into, I mean, unless it's somebody like Mark, like I remember with my tax person, I knew enough that I could ask the questions that then she would go later research and get back to me. Had I not, known some of those things, you don't know what you don't know.
Right.
Right. So 100% agree with you, Mark, on that because there's a lot of stuff that, no matter how many times people have done a business, there are nuances to e-commerce, like using your cell phone, right? Can you use your cell phone as a deduction, the bill that you're paying? How about your Wi-Fi? How about this? How about that? And I'm not giving an answer at all. I'm just saying those are questions that, if you do a brick and mortar, you may not necessarily think about. Or if you just had a regular job all the time and you didn't have a company phone, it's things you wouldn't have thought about. So,
yeah. So here's another one I thought of real quick. A lot of people think that to start reselling, they have to have like all this stuff in place. Like they have to have their LLC ready from day one, or maybe even have an S Corp on day one. And that's advice that some CPAs apparently have given, or that people have given. But that's often going to be bad advice. Is especially in California, like you guys, if you go out and you form an LLC on day one and you're not making any money yet, all of a sudden you find that you're missing $800 because that's what California charges for an LLC, which is crazy.
Yeah, it's California.
And then some people think they want to have an S Corp, and with an S Corp there are associated payroll costs and there's a separate tax return. So there's all these costs, and they're not yet making enough money to benefit from the tax savings that an S Corp can give you. So there's just people just act on bad advice sometimes, and it comes back to bite them a little bit.
Nice.
No, I've heard. Oh, go ahead.
I was gonna say you mentioned like being educated on the taxes is important, and that kind of brings me to this idea. Like I know you have a new course that is launched on kind of the more finer details on this and just bookkeeping and all that stuff, which to me I think is one of the number one things. I think that there's probably too many resellers who are kind of just flying by the seat of their pants, and they might be making money, but maybe they're not making as much as they think they are. And in a world where we know information is king, like that's all these companies, they're wanting information, whether it's on customers or whatever, because the more information you have, the better decisions you can make, and you can, you understand more about the market. So I think programs like you offer are beyond helpful. Now, maybe this is a no, but things like that. So if I were to take a course like yours, or go through some kind of seminar to learn a little bit more on how to make contacts or whatever it is, are those types of things a tax write-off also? Oh yeah,
definitely. So that's part of like your business education and training. So you can write that stuff off. You can write off my course. I mean, that's 20 or 30% of taxes that you won't have to pay. If that makes sense.
Nice. Okay, so I want to rewind real quick. I got a few more questions, and I know you got to get back to your family, but you had mentioned LLC and S Corp. Now, I've heard you in another podcast discuss the idea that being a sole proprietor is okay. Like LLC isn't like an utmost necessity, right? Most of the time is people that are trying to separate themselves in case of a lawsuit. And is that pretty much the main purpose? Is that what you're saying?
Yeah, I think that's the main benefit, is just the liability protection that an LLC can offer you. So, if you're not in a risky industry, if your business doesn't have any assets, or if you don't have any assets, then there's really no risk. If you're selling clothing on Poshmark, the chances that somebody sues you is just like very small.
Okay. All right, so like somebody trips on a dress and things go bad. Okay. All right. I get that. All right. So a question, taxes and reselling. So it's kind of interesting that how much has changed, I would say, in the last 5 years, as far as taxes go in the reselling. I do miss the good old days where I never got messages of, I've never paid taxes on anything I bought, now. And, in California, anytime anyone from California buys anything from me, they are always paying sales tax, but that's all across the board.
Mm.
Do you we already know this, but it also depends who's in the office and da da da. Do you anticipate more taxes being alleged against resellers, or do you think things are calming down now based on, the current administration's, I would say, stance on small businesses and so on?
Yeah, I don't know. I might not be the best person to ask, but I don't think so. I mean, sales tax isn't new. It's just, when e-commerce started growing, nobody knew how to deal with sales tax for online sales.
Mm-hmm.
So brick and mortar transactions or brick and mortar stores have always had sales tax, and they're just finally getting around to figuring out how to account for that for online sellers. So, yeah, I don't know. I think, yeah, I don't know. I would just be speculating, but I don't know.
Well, it was a speculation kind of question, but because I just wonder, I feel when we had to start collecting taxes, I kind of feel like we got away with it for a long time.
Mm-hmm.
Right. And now we have to pay the piper. And it was good. I mean, I remember the days where it was just beautiful. Like you never had sales tax. And I do feel like it has affected sales from certain states, especially like California and so on. So it's too difficult to say anything, huh, Mark?
Yeah, I don't know. No comment.
Okay, I appreciate your
wise man.
No,
wise
there
man.
you go. There you go. All right. So, hey, do you have any last kind of thoughts you'd like to leave with our listeners about how to make things go well?
Yeah, I mean, so you mentioned my course, and like just today, I was like trying to finalize my sales page, and I'm writing stuff like, this will help you sleep better at night. And part of me is like, okay, is that like a little bit, extremist or a little bit, is that exaggerating? But it's not. Like I talked to somebody just a few days ago, and he got some letter from the IRS, and he's telling me on the phone, he's like, I'm literally having a nervous breakdown right now. And like people out there are freaking out about this stuff, mainly because they don't understand it. So that's why I was saying, like, just with a little bit of education and understanding this stuff, you'll find that all that stress and anxiety that you just feel like is this huge weight on your shoulders and on your business will, disappear. And all that energy that was being used up, stressing out, you can now take that and refocus it onto the activities in your business that actually matter, that are making you money. So, I think drawing that connection from your taxes and from your accounting to how it directly impacts your business and, in turn, like whatever your goals are in your life with that business, it's a big deal.
Yeah. No, that's huge. And not only do you get to sleep better at night and you have the education, but you could write it off. That's like,
bingo.
That's
Absolutely.
awesome.
There you go. All right. Well, hey, Mark, thanks so much for joining us on the podcast. Really, I learned a lot. It reminded me of a few things that I need to get back to.
Yeah. Hey, it's a good time to start.
There you go.
2020.
It's only mid-January, but
Yeah.
hey.
And can you let our listeners know one more time the best places they can find you at? Maybe social media, website, things like that?
Yeah. So my website, notyourdadscpa.com. You can contact me through there. And I'm trying to be active on Instagram. It's just at notyourdadscpa. My course is called Reseller Tax Academy. If you're hearing or seeing this in January, it's launching at a sweet price. After that, it'll go back up. I don't know. Maybe I can give you guys a discount code or something, but,
Okay.
I'm happy to help anybody who wants to send me a DM or shoot me a message.
Yeah.
Perfect.
And you were super helpful. I know, like right now, I remember when I first started reselling, like I didn't have answers to any of these questions. And it was like you said, like, oh no, what's going to happen? I did. I went through my first year. I ended up getting a bill later in the summer for another $1,300 because I didn't take care of things. So totally good.
Hey, it's just a
I
price
got to
paid
tell
for
you
lesson.
one more.
Oh, okay.
So this week also, I had prepared an amended return for somebody, and this is a few months ago, and just this week they sent me a copy of a letter they got from the IRS that said that they owed, a few $1,000s. And I was like, what? Like, did I mess up? And I was just looking at it and I was like, this isn't right. Like I was looking at the IRS numbers and I was like, this self-employment tax number is wrong. And I emailed the lady back and I was like, they're wrong. Like, you got to call them and tell them that, whatever it was. And luckily she emailed me back and she was like, oh yeah, my husband called him and they found the mistake. So we're good. And I was like, I mean, like, don't assume that you owe the money that the IRS says you owe.
That's good.
Like, they make mistakes too.
No, 100%.
That's
The
awesome.
government makes mistakes. No.
Totally.
So, all right. Hey, thank you so much, Mark. Hey, if you haven't had a chance, make sure to follow Not Your Dad CPA on Instagram and also check out his website, notyourdadcpa.com. So thank you so much, Mark. And with that being said, make sure to be real,
Be relevant.
and be reselling. Peace.